25th January 2023, Wednesday. Alright, this is a must-watch video, guys. This is something very big. Now, JP Morgan Marco is coming in to call for a sell. Now, this guy has been phenomenal last year because whenever he called for buy last year, the price went down. When he called for sell, the price went up. So what do you think, guys? Will he be still the same one? Well, apparently now the thing is that he's very, very bearish with the market. And this is where he sent a chill because yesterday at the same time, we have a very suspicious trading glitch. And of course, JP Morgan share was also affected at the same time. So all this speaks for itself. And that's why today is a must-watch video. All right. So before we go to that, make sure that you do your risk assessment, and thank you AIMS for the kind sponsorship. So let's go through what happened last night. Okay, so last night the Dow Jones up by 104 points, Nasdaq down by 25 points, and S&P up by down by 2 points, right? So the Dow Jones up by 104 points, and this is the third consecutive gain, all right, for it. So what happened? Well, apparently itself, right, we all know that Microsoft was waiting for its earnings. Google was down because of some lawsuit at the moment, but Apple and Amazon have a different 1% movement. One is down, one is up, and Tesla itself is trading at 143. And I've been telling people this is a good time to take some profit because I think Tesla share will see 120 again. So now it's 143. I believe that 120 is going to come again. So what happened is this. Okay, let's look at the fundamental of last night. So there was a bit of mix in the earnings season whereby 3M dropped 6.2%, while Union Pacific dropped by 3.3%. The thing is this is very clear. The earnings will not be good. The guidance won't be good, but the thing is that the market is still going up. This is something that is a very question mark, and when you see something happening in the market, you know that sooner or later the real thing will happen, right? And we all know that right now, right, the US economy is definitely slowing down. So it doesn't make any sense for the market to be going up. And I shared with you yesterday, it's because of the short squeeze and the options market. But once this is over, which has just happened, then things will change. The thing is that the Nick from this Wall Street Journal has been very, very active recently. And of course, is like the direct mouthpiece of the Federal Reserve. And he's saying that the Federal Reserve officials are preparing to slow interest rate increases for the second straight meeting. Now, we all know that it was 75 basis point previously, then it lowered 50 basis point, and now the market's looking at 25. Now, because he's a mouthpiece, I cannot deny that there's a very good chance to see 25 basis point during the February FOMC. But if you remember what Jerome Powell says, that if the numbers are not really good, he may do something drastic or something that is not going to be nice for the market. So I just have this tingling feeling that he will say 50 basis point instead. That's my feel, and let's see what will happen then. Okay, all right. The thing is this. Because Australia now is a commodity country and it has just saw its inflation reaching 32-year high at 7.8% post 1990s, okay? So this is not a good sign because look at it. Within 2 to 2.5 years to 3 years, the inflation of Australia was from 0 all the way to 7.8. That means that basically itself, right? Just 2 years ago, this thing cost like $1, and now it's like $1.10. So it's like increasing, all right, by 7.8%. And that's the official numbers. We all know that non-official can be more than 10%. So if this is going to continue, that will spread a global inflation trend. And you can see from the CRB index right now, which comprises of 19 commodities, which you have the soft commodities and the hard commodities and the energy commodities. Now, we all know that crude oil, heating oil, gasoline will be going higher this year because if China's coming back, definitely the demand for this will be there. And gold and silver being the perpetual hedge against the US dollar will definitely be rising up again. And of course, if one of those guys, those special ones are correct with their feminine forecast, then coffee, cotton, corn, cotton, lean cattle, lean cock, all this, okay, will be going up higher, right? So if that's going to be the problem here, then the thing is that I feel that we're going to see 300 coming in by end of this year. Now, do note 265 is a figure that I mentioned as a very strong support, and we can see that this year we saw it happening once again. So all these tells you that something is not going according to the rule book. And if you look at the trending of the chart right now, the ABC chart, you can see that we have a very clear breakout, okay? So that's why I believe 300 is coming in, and if that's gonna happen, that will send another wave of inflation worries across the whole world. And of course, US Federal Reserve will need to do something there. And that's the reason why I felt that 50 basis point will be the number for the next FOMC. All right, now of course, let's look into more detail. Now this is the commodities versus the US dollar chart. All right, so obviously when the US dollar chart is the USD, when USD is climbing up, commodity comes down, right? Okay, that's pretty good to understand because US dollar is the dominated current value for commodities. Hence, therefore, when it goes up itself, commodity prices usually come down. So if let's say there is a US dollar pullback, all right, then definitely commodity prices will be going up. Okay, that's pretty understood, right? But the thing is this, back in 2021 to 2022, something incredibly happened. You can see that the US dollar was going up, but so was the commodity prices. Why? Because of global inflation. Okay, so of course now we have all the rate hikes coming in to try to curb inflation. Let's look at it into a bigger scale right now. Let's take a look. So what we are seeing right now, because of the US dollar are being dumped right now because of the 10-year bonds and stuff like that, and the lowering of interest rate hiking, that brings us the US dollar lower. But the commodity price is actually going up, right? As we all know. So think about this right now. If the Federal Reserve continue to slow down their pace of increasing interest rate, then that will bring the commodity prices higher. And that will become a problem because the inflation will continue to go up. Now, if they were to push up the US dollar, or the basically high interest rate to basically combat inflation, that will pull back the commodity prices, but that will also create the downside for the equity market. So you understand the point now. They're at a crossroad whereby they do this, that's a problem, you do that, the problem, unless you can do a Paul Volcker thingy by, regardless of what happened right now on the stock market, just go all the way, high interest rate all the way up to bring inflation down. But again, we all know that this Jerome Powell is no Paul Volcker. So I can tell you this, guys, if let's say the next half of the year itself, if we're going to see this, okay, if this is what people are speculating right now, if later on there's a necessity to really reduce interest rate, then the dollar will really go down and commodity price will shoot up. And that's the reason why I'm very positive on gold and silver for the longer term. Now, the thing is this, we all know that the Microsoft earnings came out after the market and it offered lackluster guidance, all right? So the thing is this, the cloud growth slowed to 31%. That's not nothing near to the analyst projection. And we all know that it's pretty disappointing. Although it basically beats on earnings with strong growth, but the thing is that the revenue was still there. In fact, it was reduced. So let's hear what this guy had to say, who represents about how he feel about this Microsoft current earning.
So Scott, so we got EPS as a beat here, $2.32 adjusted versus the $2.29 expected. Revenue, a very slight miss, $52.75 billion versus the $52.94 the street was looking for. And Azure cloud growth, as you know, this is what we always look for. Investors are always curious about. 31% growth versus the 30.8% per estimates. That's just barely a beat there on Azure growth, but that growth is slowing quite a bit, Scott.
So you hit the key number there. It was 30.8 was the estimate, and that's probably why the stock was rising. But that, Joe, is the biggest number that we were looking out for, right? Because it is all about the growth in the cloud. We know that the PC business across the industry is bad. Yeah. So you knew that part of Microsoft's business was going to be slowing. It really comes down to a question of Azure. So it's 31 versus 30.8.
Mm-hmm. Cloud revenue for Q2 comes in a little bit better, 20.
All right, so basically you can see that immediately the Microsoft shares actually climbs higher after the earnings, but we all know that it doesn't make sense because the earnings itself is actually just slightly higher, and overall is down if you guys be quarter and quarter. So that is what happened next, because if you take a look at the chart right now, you can see that this is the chart after the market, during the post market. The share price went up first initially. It's a gap up, right? You can see that. And then after that, after about 2 hours, the share price just came down all the way, and now it's trading even lower before the market closed. So this actually tells you that, right, you can play with the numbers, but end of the day, people who are smarter is actually looking at it. And if you actually do some very simple calculation, you know that the companies are not going to do well. And be mindful is that Microsoft is one of the leading companies that's doing pretty well in the last few quarters. So if they are not going to be performing, I just cannot imagine the rest of the technology companies. And that's the reason why I'm warning a lot of my friends to be very careful of this coming this earnings season. Now, the very suspicious technical glitch that happened on NYSE, this is the one that I want to talk about, okay? So if you know this, let me share with you. Apparently, all right, yesterday, before the market, during the market open, right, dozens of stock open at prices well above or below prior day closing price. That means that it was a gap up and gap down, but the thing is this is more than the usual. So most of them were halted shortly after the open under the rules designed to dam down excessive volatility, because that was what happened in 1987 and 2010, whereby the market just go crazy and it's respond to that. Okay, but the thing is this. Look at the names. We have quite a few big names here, MasterCard, McDonald's, Uber, Wells Fargo, Verizon, Shell, AT&T, Wells Fargo, Nike. We have one big one we saw we have was this Visa, and we have this ExxonMobil, Walmart, Occidental Petroleum. Now, seriously, when I look at this whole thing here, I mean, the names are very big, but you look carefully, it's a very well spread array of a portfolio. And this is not very interesting here, because if let's say it was a technical glitch, why only these companies? Why not the whole entire board? That's a very thing that I don't really understand. And of course, they say that this is where they do a lot of computation to talk about which one is actually the erroneous position and trades. But the problem is, if you look at it right now, right? Okay, we all know that how opening price is being created is determined by the thousands of orders to buy, sell individual stocks. And then the orders are aggregated to a single book so that you can have your opening price, right? But the problem is this, all right, there are many orders that basically did not come in order to the book apparently, but that determined the opening price. And if all that is so, right, give you an example, like this company like Walmart, it closed at 142 yesterday, but it opened 159. It's a jump. But after it jumped already, the price came back down. So all my point is trying to say is that why out of nowhere this actually happened. And in my opinion itself, right, look at it, the trading halt itself are all done, all right, according to the New York Stock Exchange, the official website. But the thing is this, okay, they were trades done. They were trades done. Look at it. Example, this is Morgan Stanley, all right? This is the share price. The price, basically itself, you can see that the volume was done during that period of time. So the question is this, okay? So why not everyone? And then it seems that the market instantly recognized it, and there were trades done itself, and of course someone might have profited from there by buying low and just selling almost instantly in a minute. So all these tells me that if you think back for a moment, when such things happen, you need to be very, very careful, because sometimes you just need to be take the devil advocate to see what's the situation right now. So for Marko Kolanovic, he has been basically pretty bullish for 2022 last year. And now he's saying he's outright negative on stocks. And he say braces for correction and hard landing. Wow, very heavy words. Now, well, apparently from CNBC, he's ranked as #1 equity strategist by institutional investors for the 12th time. But we all know that last year was terrible. So I'm not going to leave it there. All right. The thing is this, he believed that, right, even though we have China reopening and a weaker dollar, he believed that there's something more to go. All right. He believed that there should be more downside. In fact, he's looking at 3.6, 3.4, 3.2. All right. So all these is mentioned by him. Let's just hear what he has to say, and you tell me how much you can trust on his words. Okay. All right. Before I go to the chart here itself, let me just bring him into the picture. Let's go.
Argument, you know, and that's an argument that we kind of used extensively last year and didn't kind of save us. Position was low already in June, July last year, and we still went to lows, you know, like so. But I agree, if on a positive side, positioning is not that high, and that's, I think, it makes it difficult. That's why it makes it painful, and market kind of drifts higher, because there is a little bit of that positioning pain or ability to re-rate as the volatility comes down, you know. But overall, we do think the direction of economy is south. You know, and at some point that will have to, you know, corporate CEO may say like things look fine now, but are they going to be fine in 3, 6, or 9 months? And market should look a little bit ahead of that.
Marco, what's the math around earnings for this? I think Mike Wilson, his low end's 180. You're starting to see more and more people ratchet down their S&P 500.
So you can see over here, he's saying that the three things that he's watching out, market mistakenly not pricing in recession. Well, I kind of agree. And cyclical stocks are overpriced, which I also agree. And first half, S&P will retest October low. Now, this is something very similar to Mike Wilson, right? Very, very similar. So I just wonder, did they copy the homework, or they all say the same thing to lie to everybody, or they really think that the markets will go down? Well, you have to make that decision, yeah?
Yours. So look, we are at 205. It's a tricky, right? So we are at 205, which sort of prices in mild recession, right? So now if there is no recession, which again, we don't think that that's the case, but if there's no recession, it's probably 225, 230. If there is recession, it could be more along what Mike is saying, could be another, 10% lower, so call it 180, 190. So we're sort of in between, so very mild recession, that's what we're pricing in. Now, we can be wrong both ways. It can be worse or it can be a bit better if we avoid recession. But we do think it's 200 and then 205, and then multiple is a little bit high now, given that the Fed is still moving higher.
It doesn't sound like your PE matches with what you foresee for the economy, though. I mean, if you say the 205 reflects a mild recession, and the indicators that you take a look at indicate that everything's going to go south even more, that doesn't say to me mild.
Yeah, you're right. So that's why what we are projecting.
You can have the full video watch on Trader Boy's Facebook page, but the thing is this, he's definitely outright negative, and it's pretty similar to what Mike Wilson said from Morgan Stanley. So let's go through the chart again from my point of view, and you see what I had to share and see whether we have the similar views or same thoughts, all right? Of course, if you're different, that is all right. Okay, so first of all, we can see that this is like the classic A, classic B, classic C, and classic D downtrend line, okay? So by technical, we are still on the downtrend, okay? Now, of course, a lot of people doesn't agree because we have X and we have, my Y has been moved around. This is Y actually, and this is Z. All right, it's supposed to be like this. Yeah, I think that's how I have accidentally drawn my chart wrongly. All right, so we have that. Okay, so the thing is that people who are positive will say that the XYZ is showing that the market is going to go up. For those who are more the bearish side will say the ABCD is going to bring the price down. Okay, that is the first argument here. Now the second one, let's take a look here. Let me clear the screen a little bit, make it cleaner for you guys. Now this is the technical of the RSI at 70. But you notice that ever since November last year until now, we have not seen the RSI at anywhere near the 70 marker. Now at 70 is usually means the market is overbought, right? But also represent the bullishness of the market. So now we have a common point which actually tells me that it's lowering because B, C, D is actually lowering down while we have the similar common points. Now in technical, this is actually a selling wave. But of course, if you argue there's a so-called a negative, there's a slight divergence here, that is what a lot of people are saying, that this actually changes the entire downtrend. Okay, so I cannot agree with that, so we're just going to be very objective here. The thing is that we all know that Mike Wilson says that 3,900 is a very critical level, and if it breaks, there will be selling, which we saw, but we can see that every time when the market take away 3,009, it becomes a strong support. So in short, on the positive side, once again, as long as the S&P stays above 3,009, there's no reason to panic, and in fact itself, right, it's time to buy. But if the market ever goes down to 3,009, then it will be a heavy selling and the more selling to come. So take note of this very important point. Now the thing is this, the technical point that I have been using it myself, which I think is much fairer and much more consistent, is this particular figure, and that is that 3809 figure, 3809. As long as the S&P stays above 3809, we can see very clearly the market really finds strength and support over there. The last one that I'm going to tell you is the common volume, all right? Now we can see that the common volume actually really happened when the market is near the peak of each cycle. And after that, we do see the volume dipping down a little bit while the price is coming down. And we can see that we do have a bit of volume coming down while the price is going up. So if any time there's going to be any selling, usually the selling will be pretty fast. So overall aspect is this, we have the MA200 right now showing as a very strong support at 3964, which is right here. So as long as the market stays above the 23.6, which is this round Fibonacci, and above the MA30, which is the MA200, which is 3964, we're still fine. But if the market loses and goes down below 39.59, which is actually the same level about there with the MA200, then there will be some serious selling. So guys, put a note there, 39.60 to make it simple. As long as S&P stays above 39.60, you can stay long. But if the market loses 39.60, then the first target will be 3900, and then we're going to see 3809. All right, this is going to be a very important numbering that you guys take note of yourself, and I hope that you guys will benefit from it. It's going to be very, very, very important. So traders, make sure that you follow this script here itself. Okay, all right. So because if you ask me why market crashes, right? Apparently on Google, it says that there's 5 main causes of the stock market crash. Now, first of all, overpriced share. Okay, we know that, high PE value. Public panic is when people feel that it's margin call, in short, yeah? Rising bank loans is because people are borrowing more money from the bank at low interest rate environment. And then we have the agriculture crisis with inflation. And then Federal Reserve start to increase interest rate, and that's a problem, and a cynical press. Okay, so my point is this, okay? We have overpriced shares, not really. Public panic now, okay. Rising bank loans, we have that. And agricultural crisis, well, is looming up. Higher interest rate is happening, and a cynical press is always there. So we are not at the crash level yet. But if any of this thing really happen or start to show, then you should know that we are pretty near to one. So be very, very careful. Now, I've been a big advocate of buying VIX at 18 to 19. And I'm going to tell you this, guys, consider the buy because VIX is back down to 19 again. Now, the last time it went out to only 21, which we hardly take some profit. But you can see one thing, guys, the consolidation itself is getting smaller and smaller. And this is a very technical point whereby we should see an outburst very soon. Now, for it to really go down, you need to have the stock market rallying up. But think about this, it's going to be very difficult. If the forward guidance are going to be not so fantastic for the first quarter and second quarter of 2023, I cannot see why the S&P will go any higher. So if you take a bet, right, I believe instead it go up instead. So if I will buy VIX at 18 or 19, I'm aiming for 26 itself. But of course, for the last few times, you look at downward trend, 21 will be a good choice. Only if 21 breaks, they can aim for 25, 26. Alright? But definitely, VIX is a buy as long as it's going to 18, 19. Now, the lowest downside should be on 15. I just can't see how it's going to happen then. Then let's take a look there. Okay? Now, can we still trust Fundstrat, guys? Because too much negative stuff. Let's bring some positive light. Now, Tom Lee is one of the analysts that I uncover, and I've been following him in 2020. He was magical, spot on. 2021, he was really like the gem itself. But the problem is 2022, he's been calling for buy on dip, and the market keep on coming down. Remember? Yeah. He's been calling to buy on dip and the price keep on coming down. In fact, in the second half, he also called for buy. Alright, to give it to happen, the market did recover in the late 2022. But the selling is still there. So if you ask me, right, he wasn't that perfect. Now, the thing is this, okay? I'm not saying that anybody's going to be perfect, just that just feel all wrong. It's just like every day someone get it correct for a long time, then apparently in the next year, things will go wrong. Because who knows, the boy controlling him? Anyway, now his sidekick, I think, come in and talk about his view. And let's watch what he says about 2023. Very interesting. Oops, I think I lost that. Give me a moment. Yeah, I cannot play this. Okay, I think there's some technical issue on that. Where's my play button? Alright, I think that is something that's missing. Hold on a minute. Okay, having a bit of technical issue. Just give me a moment. Bringing him up to the picture. Hi. That is so odd. Okay, let me just play from this side and see whether can I get him on right now. Okay, there's some bit of technical issue not going according to plan. Okay. Alright, having a technical issue on my side, so I will show you the video of what he shared on Trade the Boys Facebook page. Alright, so apologize on that. It was working fine earlier, but just things happen. Murphy's Law. Okay, alright, let's look at the market right now. Let's take a look. Okay, so let me just give you a hint over here, moment. Right, so first of all, let's see the Dow Jones first with the KFC chart. Now, I told you guys my KFC chart have been very, very accurate. And that level is at 34 is 33,031. Alright, something went wrong yesterday. Apology on the number, but now we can see very clearly it's 33,031. And you can see the market is still trading above it. So as long as the market trades above here, there's no much concern. But of course today we have a black candle at the moment. So if we pulls back, this will be the first support, 33,031. Okay. Now for the Nasdaq, right? We have a bit of issue, guys. We are now at the KFC level, and that's 11,774 level, and we are now right smack there. Okay, guys, this is a warning. Now, yesterday was incredible. Let me show you yesterday's chart. Yeah, Yesterday, the Nasdaq came down all the way, and you can imagine this, the low was 11,776. So it misses my KFC level by just mere 2 points and recover all the way up. So that is why I say, guys, if you have my KFC level, you will know what to do with the market. And now you can see right now we are having a bit of decided point. Now, if you wouldn't buy now, then you wait for it to go above the 11,774 level, then you buy, because that is bottom picking. But if the market stays down, be careful. That means the market can come down all the way to 11,200. So traders, be very, very careful. Yep. Okay. I'm warning you. You just need to be concerned on this. Now for my gold chart, is another incredible one. Now gold chart, the KFC is 1921, and look at it, 1, 2, 3 days in a row, the market couldn't go below this level, despite it came down below, but it rebounded. So 1921 is a very strong support, and buying below it is alright. If you dare, it's a pretty good try out. But if you want to be very safe, buy above 1921, and you can see all rewarded for 3 days in a row. So if the gold price come down, because I suspect the dollar is going to go up here. Let me just bring the dollar chart right now. Let me just see. Can I bring the dollar chart? Yeah. Give me a moment. Okay, I bring the dollar chart. I want to take a look at the dollar, and I think that the dollar can go up. Okay, let me show you the chart right now. Now this is the dollar for the longest of time, and this is the Fibonacci back here itself at the lowest point, all the highest point, and we have the Fibo level. Now the Fibo level that I'm using right now, 102, is the 50% mark, and if you look carefully, if you broaden up the chart, you can see that, okay, that's the reason why you can see that the dollar is moving down, because it's been trading at the 50% mark for some time, for 4-5 days, then now it's trading below. Now, why am I calling for this? Because we're going to have FOMC meeting, and if, let's say, there's going to be any wind of what may be happening to the meeting, the US dollar will move first, in my opinion. Right, the boys have all this little insider news, who knows? Alright, so it's one of them, because you can see the 10-year yield right now is already moving up slightly and moving according to rules. It came down to the moving average and rebounded, right? So I believe that that is a telltale sign of what the US dollar will be heading in the coming days, okay? So watch out for gold. This is the key support right now, okay? All right, so let's just look at the TWB chart for today. This is the Dow Jones. Now the Dow Jones now is trading at 33,676, and the thing is this, I'm going to warn all traders. If you look at this TWB traders, 33,765 is the pivot 2 level, which incredibly this morning the market touches it and pull back. Now we all are trained in TWB that if the market opens near pivot 2 and touches it or trades below opening price and pivot 2, you have only one thing to do, and that is to sell. So that's the reason why I called for sell in this morning when I was doing my I'll follow you segment. And the thing is, this now is happening right now. But the difference is earlier the boys were selling, so you can see the market coming off. Now, even though it turned red, the boys are buying, so you need to wait for a while. But undeniable, you can see the KTR -1 stopped there perfectly. This is an incredible system, I tell you that. Okay, so for today, the first support will be MLP, which the market has broken it. So the next support will be 33,553, that's MA30. Now I suspect the market will stop here, because why? The KSI is still green, even though we all know my KRW is red. So usually what will happen? If the KRW is red or the KSI is green, we had to watch out for the previous low. Now the previous low of yesterday was at 33,391. So unless the Dow Jones really come down and go below it, if not, I think 33,553 will stop first for a moment. Yeah. Now if ever the KSI and the KRW are red together, like what you see over here, then the selling will be torrid. Okay, so one thing to look out for today. Now for buying side, right, the market missed the BNB level just by a fraction. So if the market reverse instead and go above the pivot 2, then of course we can see 33,827 traded. Yep. Now Nasdaq today is very clear. Its opening price already go below the MLP, and it had broke below pivot 2, so which means it's a sell signal. If you look at the 15-minute chart, it's very clear that once the market opens, trades below MLP, is a sell, and go below pivot 2 is confirmed sell. So we have 3 waves of selling, and now the market is at this current price right now. And if this will continue, right, the BNB RL level, which happen to be here, let me change the color. All right, because we have a lot of changes of these colors coming up. Okay, so we have right here is at 11,700 level, and this level is very near and stacked to this MA200. So I strongly believe that 11,694 will be tested later tonight. Okay, now KSI is green and KRW is cyan, so which means that there will be support around this area. So traders, you need to be very careful. Okay, now the S&P 500. Now S&P 500 today is DJDD, and the pivot 1 and pivot 2 is at 39.95, and the market really rebounded perfectly here. Now KSI and KRW are both the same positive side, so that's why kind of like unexpected for this to be happening. Now only if the market loses 39.95, then the selling will bring it to 39.31. But if the market stays hung and strong, we can see going back up again. Now if you look at the 15-minute chart, you can see the incredible support. You can see on that pivot 2, right? The price came down all the way, touches pivot 2, supported, and now it's trying to stay afloat. But if it goes down later to below 39.95, then the selling will come in once again. Okay? All right, so this is the US market. Let's look at the oil market. Now the oil market has shown strength in the resistance level at 81 level. So that's the reason why yesterday I showed you guys, if you want to take some profit, 81.80 can consider take some profit. Now it's now hanging between the BNB level. The KSI and my KRW both are in positive shape. So unless it breaks above 80.61 today, then we can see going back to 81.80. All right. Now, of course, if inflation is in the cards, then crude oil price should be going higher, and probably that will dampen the entire equity mode. But I also been saying before, if the crude oil price really come down, some of the Dow Jones component stock will also come down, right? So watch this, guys. If the crude oil price really come down to 78.50, some of the Dow Jones component stock will be coming down, and that will pull the whole index down. Yep. So take note of that. Now Nikkei, let's take a look. Nikkei is trading higher right now because the dollar yen is moving up a little bit. So the thing is this, the KSI is red in color, but the price is going up. Okay. The KRW is cyan, so that gives you the weightage. So you would ask me, anything around 27,500 will be a good level to take some profit. Now today is heavily supported by MLP and MA200, also by the MA30, so very positive buying right at the moment, but I'm not going to chase here. To me itself, right, I still believe that the equity market will come down soon, so at this point, I won't want you to buy. It's too high anyway. So just wait for a while, let the price come back, and we see how it goes from there. Okay. All right. Let's look at the. This is the done on this. Let's look at the currency right now. I think there's something I'm missing my currency chart. Okay. The euro today is trading above pivot 1. So by default, it should be going higher. KSI is green. KRW is cyan. So all are positive. 1.09 should be the first, 1.0916 should be the first target. Let me just bring out more of it to just share with everybody here. Okay, that was the majors. We have the dollar yen, we have the pound. Okay, let's bring them in. Dollar yen. Now dollar yen is now trading between the two pivot point, and today is an inverse pivot. So usually the market may pull to the pivot. So 131 will be my target for dollar yen. But note KSI is great, yeah, but the weightage is positive. Okay. So if it breaks above the 2 MAs and MLP, we should see 131 coming in. Pound. Let's take a look at pound. Now pound is basically having a bit of support at the new BNB right now. So as long as pound stays above 1.23, 2320 is fine. KSI is green, KRW is cyan, so we should see further upside if you can break 123.53 level. All right, that will be the currency side. Let's look at the commodity, which is gold and silver. Okay, hold on a minute. Okay, I think there's some. Okay, never mind. Let's just find. That's my gold and silver chart. Here we go. Okay, let's fresh back again. Okay, gold price today is a bit interesting. Gold price today now, the opening price is at 1937. But the problem is that pivot 2 is actually trading at 1924. And it's now coming downwards, okay? Now, by right, above BNB RL, usually you hit the BNB extension within 3 working days. But the last 3 days, we don't see much upside, even though with some strong support. So KSI and KCX are all positive, but the gold price coming down right now. So I strongly believe that 1934 MLP is a critical point, and now it's trading below, right? So 1924 will be next. If the gold price comes down to 1924 and stays supported, I think that is where you can consider to buy something, okay? But if the market goes below 1924, because it's below OP and pivot 2, then selling can bring it all the way down to 1900. All right. So for me, for still gold, it's a bit hard to call right now. Fundamentally, I think it's going to go up, but the technical side just feel that it's going to come down first. Okay, silver, as I shared with you guys, is coming down a little bit as we wanted it to come down. So silver now is trading within a new BNB, and I think that if we come down to 22.74 here, will be a good level to consider buying. KSI and KCX are not helping. They are all pretty mixed at the moment. With the stack around 23.74, I believe silver will be sideways for quite a while. Yeah. Now note today got no pivot for silver. Yeah, there's no pivot for silver. And last but not least will be we must have our this Bitcoin and Ethereum, right? Okay, now for Bitcoin, it has come off. I told you guys 23,000 is a very strong resistance in my opinion. And today Bitcoin is trading at 22,600 right now. Now for today's pivot, as you can see, is trading at 23,400 and 22,131. So it's a bit middle. So anything below 22,131, then we can see some selling all the way down to 22,665. But if it recovers, then 23,400 will be next. And last but not least is Ethereum. Now Ethereum has came off today. Now I have been warning people about Ethereum. I say that 1650 is a strong resistance. We saw it before, and now it's coming off to 1545. I believe that we will see a very strong support around this area at 1500 for Ethereum. Anytime it goes lower than that, then it'll be 1393. All right. So overall, my view is this: I still think that we have an economy that's not very strong right now, and this stock market going up is just basically pumped by the boys. It's going to be anytime the boys may dump, and it could be just next few days. All right. Hopefully you like this video. Thank you for watching. This is Cal signing off. Bye bye.